There we go. So what we're going to do is we're going to go through each one of the coverages, and I have some real life claim examples for that I've actually experienced in my career, and some that we've actually experienced at Preferred, where a subcontractor did make a large mistake that costed the insured either money or their ability to be insured, period. And then I also have an example of a contractor that actually went out of business because of the mistakes that their subs were making. So it can be catastrophic. So that's why this is so important. And then I also have included a sample certificate that we'll go over a little bit at the end that has all of the different coverages that you want to watch out for and the applicable endorsements to evidence that they actually have that coverage. Feel free to interrupt at any time. If you have questions, I don't mind being interrupted. And then we'll just get to it. All right. So what we call this in the insurance biz is risk transfer. You want to transfer your risk to your subcontractor, okay? This is really important because a lot of carriers, insurance carriers that insure you guys, they want to make sure that you're getting the appropriate certificates from your sub and that your subcontractor agreement is robust enough to protect you. And I'll explain why that's so important, because everything that you get in a certificate of insurance, all of the endorsements that are attached, they reference the subcontractor agreement. Every single one of the endorsements will say as required by written contract. So if your contract doesn't require that they have certain insurance or doesn't require that they have certain limits, the subcontractor agreement will always prevail in the event of a claim. So that subcontractor agreement is very important. And I know you guys have a very robust subcontractor agreement, and I think we've shared what we have with you guys. So I'm not worried about you guys in terms of your subcontractor agreement. So we're going to talk about why you need to obtain COIs, certificates of insurance, with adequate coverages and with the appropriate endorsements. And then we're going to talk about what happens if you don't, with some real life claim examples, why the limits matter, and why the additional insured endorsements and the subcontractor agreement tie together. And then what requirements you should be asking for of your subcontractors to make sure that you're protected. And then we're going to demystify the certificate of insurance because it can be a little bit cumbersome. Okay, so carriers, like the people who insure you guys, they want to make sure that you're not subcontracting out a lot of work. And if you are as a GC, that's okay. But most carriers have a tolerance, if you're not a GC, of no more than 25% of your work being subcontracted out, because subcontractors can cause so many problems. That's why carriers are so interested in how much work you sub out. There are only certain carriers that will write insurance for general contractors for that reason, because subs just can create a hassle and a problem. All right. So the reason that carriers care so much is because the definition of a subcontractor is that they don't work for you. Therefore, you have limited control over the subs, of their employees, of their quality of work. You cannot direct what will be done or how it will be done. So that's why carriers care so much about making sure that they're adequately insured. You really don't, you can say, yeah, you need to be safe. Yeah, you need to wear PPE on the job site, so on and so forth, but you can't actually necessarily give them direct instruction because they don't work for you. All right. So you want to transfer your risk to the subcontractor, and that helps to manage and control the strategies that involve the contractual shifting of the risk from one party to another. And you want to make sure that the subs are assuming all of their risk for the work that they're putting out to you guys so that it doesn't fall onto your company. All right. Now, you have to get certificates from your subcontractors. I know that you guys are, but we do have some insurers that kind of fly fast and loose with that requirement. It's more about, and everything moves fast in construction, right? So they got to get on the job. You've got time limits. You've got people that you're answering to that have hired you to do the work. You've got to shift some of that work to a first tier sub or a second tier sub or even a third tier sub. And all of that stuff, paperwork goes slowly, right? So a lot of times people sort of kind of cut corners and they'll allow a sub to get onto a job site before actually making sure that they're adequately insured. And then the methodology in insurance with some GCs, like the big guys like, Gilbane and Whiting Turner and NVR and Toll Brothers, is they'll let those people get onto the job site sometimes. And then if their certificate is not compliant, they just hold payment until they get their cert compliant. Well, that isn't going to protect you in the event that they do the work the wrong way or they cause some loss to the third party. So that's not a good strategy. So you really should, in an ideal situation, have a certificate of insurance that meets all of the requirements and you've checked them off before you let them step foot on that job site. Withholding payment is not a good strategy, but we know the reality of construction is that's a lot of times what happens, but really there should be no exceptions to that. And we have some smaller people who, like a painting subcontractor who will sub out, a portion of the work to somebody else or what have you, and they'll let their cousins, brothers, uncle, somebody or another, step onto a job site and they don't have the appropriate insurance. And I'm like, oh yeah, we know Joe, he's a good guy, and then something happens. You just really cannot make exceptions for people, because those are the people that are actually going to cause the problems. And I've seen that before. And it's just like, don't do it. Okay, what happens if you do? Let's talk about, the worst case scenario. So say you start letting a lot of subs come onto the job site that either don't have the appropriate insurance or, their insurance lapses for some reason. They've canceled for non-payment. A lot of times also too, people know that you can get canceled for non-payment, but you can also get canceled if you don't comply with the audit. So we have a lot of really smaller guys who just will not comply with the final audit. And I don't know if all of you know what the audit process is like. At the end of the year, you've got to submit what your actual payrolls were, what your actual exposures were, and then they audit, and then they, either give you money back or it costs you more money at the end of the year. We have smaller people that just fail to comply with the audit. They don't get the stuff in. Well, an insurance carrier can cancel you for not complying with your audit, especially if you're a habitual offender year over year. So there are a lot of reasons why a subcontractor might have their insurance canceled in the middle of the year, and you won't know it unless you have some of the appropriate coverages. Like one of the clauses is 30-day notice of cancellation to the certificate holder, which would be you guys, right? If you don't have that, you will never find out that the insurance got canceled. And all of a sudden you've got somebody continuing to work on a job that is actually not insured. If that continues to happen, then your insurance carrier, because you have a contract with your insurance carrier, you agree that yes, you're going to hire subcontractors, but you're going to do everything the right way. You're going to make sure that they've got insurance. You're going to make sure that they're safe, so on and so forth. If you have broken that kind of handshake agreement with your insurance carrier, they're going to be upset, obviously, because they can't underwrite your subcontractor. They underwrite you heavily. Every time we go through a renewal with your insurance carrier or we market you to a new carrier, the underwriters dig into everything about you. They'll look at your website. They'll look at the application that we fill out for you guys saying what you do. And if there's something bizarre on the website that we don't include in our application to them, we'll say, well, the website says they're doing waterproofing. The website says they're doing, hot torch work. And, is that true? And we have to explain to them, well, yeah, but it's only 1%. Or they did one job one time 10 years ago, but it was a great job. They want to feature it on their website. And that's fine. And we'll talk to the carriers about that. But they don't get to go through that underwriting process with your subcontractors. And the way that insurance works is if your sub does something that causes a loss, either they're not insured, they're not adequately insured, your insurance becomes the proxy insurance and has to pay that claim. If an insurance carrier does that even once, usually, or more than once if it happens, they can actually add an exclusion to your insurance policy. This is a form number that we use in insurance land, but the exclusion is damage to work performed by subcontractors on your behalf. And there are some insurance carriers we don't, because we specialize in construction at Preferred Insurance, we don't use those carriers, but there are some insurance carriers that will automatically put this exclusion onto their policies because they don't want at any point to ever be responsible for a subcontractor's claim. Subcontractors, like I say, is such a hot button for insurance carriers because we just don't have control over them at the end of the day. If that exclusion does get added to your policy, and I know it's not going to happen to you guys, I know I'm talking to a group of people that really have their act together, but some people don't. If that ever happens, you are 100% responsible for a claim that's the responsibility of the negligence of your subcontractor. So if they cause $1 million loss, it's excluded from your policy. Therefore, you guys have to pay it out of pocket. Nobody wants to pay $1 million claim out of pocket, right? So that's why that's why this whole thing is so important. All right. So what we're going to go into is the certificate requirements. Now, this is where we're going to start to get into a little bit of the technicalities. So if I go too fast, just let me know. The very first thing that you want to make sure of is when you get a certificate of insurance from your subs, that the certificate is going to include your company as an additional insured, which you guys are doing. I think we've given them a sample certificate. You guys are probably using the sample certificate that we've provided to you guys. That should be part of your subcontractor agreement, part of the packet that you give to a sub that you're thinking of hiring and are maybe bidding on your jobs. Okay, here's our subcontractor agreement, sign this. Here's the sample certificate that you're going to need to provide to us. The subcontractor agreement is going to have in it, you have to have general liability, workers' comp, automobile, umbrella, in some cases, even professional or pollution coverage. And it's going to say, this is the limits that you're going to have. It's really important. There's two sections of general liability insurance. One of them is the ongoing operations. So that's while they're on the job doing the work. But where we see the majority of claims happen is after the job is finished. And in insurance, we call that the completed operations coverage. So sometimes you'll get a certificate and it'll say, oh, Vantage is additional insured, yay. But if it doesn't include ongoing and completed operations, you're not fully covered. That's why in the sample certificate of insurance, we have this wording down here in the description of operations. And it says, certificate holder, which would be, or it would say Vantage Construction and affiliates as required by written contract or agreement are additional insured with respect to general liability, which includes ongoing and completed operations. There are specific endorsement form numbers referenced here. These are actually really important. Automobile liability, umbrella and excess liability regarding all work performed or services rendered by the above named insured on their behalf. Excess and umbrella liability follows form. What that means is if they have an umbrella policy, it needs to honor any endorsement or coverage that's on all of the underlying policies. So what an umbrella does is it gives an extra layer of limits on top of the general liability, the automobile, and the workers' compensation. So because, in general liability and workers' comp and all that, there's maximum limits that a carrier will do. It's typically $1 million. But if you want them to have 5 million or 10 million, they've got to get an umbrella on top of that. So it augments those limits. But if they don't have a following form umbrella, it can say, oh, well, you know what? We're not going to honor that additional insured agreement. We're not going to honor any of the things that are on the underlying. We're just going to give you extra limits for the stuff you guys do, right? So it has to be a following form excess. The general liability coverage has to be primary and non-contributory. What that means is that their insurance is going to respond first and only. It's not going to ask for your insurance at any point to contribute to a portion of the loss. And then waiver of subrogation, which means that, so here's an example of a subrogation claim. Somebody, and we know if you hang out online or on Reddit or, you're in, meme culture, you'll see a lot of times, contractors, putting a ladder out and using it as a bridge. Whenever I watch Everest documentaries, it always creeps me out when they're walking across ladders to get across crevasses. Like, oh, don't do that. That's not what they're meant to do. So say they take a ladder and they use it as a bridge, and then that ladder collapses because that's not what it's meant to do, and they get hurt. Well, sometimes, and we've had this happen before, where they will actually try, so there's a workers' compensation claim for the injured worker, and then they will try to subrogate against the manufacturer of the ladder to say, well, your ladder failed and I fell. So the carrier will pay the claim, and then they'll try to recoup some of that loss from the ladder manufacturer. That's an example of subrogation. Sometimes it's valid, sometimes it's not. So when you get a waiver of subrogation from your subcontractors, it means that they will not come after you to contribute to a loss through the process of subrogation. Okay. Any questions on any of that? Okay.
I have a question. So does it come into play when you have a subcontractor knowingly doing something incorrect, whether it's a OSHA standard or a standard that we have identified in our safety program, when it comes to filing liability claims?
So you're saying if they do something wrong,
They know
they
that
create
they're
it.
knowingly doing it wrong. Yes.
So their insurance will pay. And then that waiver of subrogation will protect you from them coming after you. In that scenario that you just described, normally you would want to subrogate against them because they have done something wrong. So say one of your guys gets hurt. They walk by because, and this is a claim we see all the time in construction, there's a hole in the ground. And that hole in the ground is not properly marked off. So your employee goes walking across the job site and they fall into that hole. That's the negligence of your subcontractor, right? So you still have to file a workers' comp claim because that's the rule in workers' comp. Your carrier is going to pay that claim and you are going to subrogate against your sub. So this waiver of subrogation doesn't stop you from going after them. It stops them from coming after you. Okay. And then just the 30 days notice of cancellation is the last part of that. So this box down here, this description of operation, it lays out what you're going to require them to have. But there's been some court cases and lawsuits related to this piece of paper on the top. And the consensus has been, based on the precedent set by the court, is that this piece of paper cannot convey coverage. It's basically, in a court of law, useless. Okay, it's just outlining, it's an evidence of insurance. It's saying this is the insurance we have, this is the stuff we're going to agree to give you. Without the actual endorsements attached to the certificate, this piece of paper is used in court. It's great for you guys to have as a guide to see what coverages they say they have, but without the endorsements, you don't have any guarantee that they actually have those coverages. That's why collecting those endorsements is so important. Are you guys doing that? Are you making sure that the endorsements are attached, or are you just getting this first page on the top?
We haven't been as consistent about getting it.
It's harder. It takes more time. You get more pushback, and it delays things. And again, you want to get them on the job. You got to get things done. You've got a contract. You don't want to be in breach of contract. You've probably got payment and performance bonds you've got to adhere to. You can't delay the job. That's where this starts to become a logistical nightmare. Who here actually handles getting certificates that you guys are required to get as Vantage for whoever hired you?
We all are.
You all are, perfect. So have you ever dealt with EBIX or Compliance Depot? These are certificate clearing houses. So you guys send your cert into whoever, who's somebody that you guys do a lot of work for, that you get hired by? Okay, so MRP says, Vantage, I need a cert, and it needs to have all this stuff, right? So you send it to MRP. MRP might have a certificate clearinghouse, some of them are EBIX, Compliance Depot. I can't think of any others. My COI, that's another one. They're certificate clearinghouses. So a lot of larger companies will actually hire somebody to make sure Vantage's certificate is compliant. And they actually make sure that every single one of these endorsements is attached, that the endorsement is the correct addition, that it's the one that they actually want. And if it isn't, they mark Vantage as a non-compliant. And either depending on who that person is, they may say, no, you can't come on this job site, or they'll resort to the payment hold situation until you become compliant. And the reason that people hire these clearinghouses is because doing this is such a nightmare for a company. It takes a lot of manpower, it takes a lot of time, it takes a lot of personnel, and it's an expense. So they'll say, you know what, we don't have the manpower to do this. We're going to hire a company to do it for us. And that has its pluses and minuses, but that's why, because it's hard to do, that's why people sometimes hire companies. And you guys aren't at that point. At least a couple of years ago when I was here, you weren't at that point. How many certificates of insurance do you guys review per year? Do you have any idea? 5? Did you say 5?
No, I said,
Oh.
I mean, yeah, 60 jobs times 15 subs per job, maybe on average. So
Okay.
somewhere in that realm.
It's a lot. So yeah, and I understand it's difficult, but what we want to do is we want to explain to you guys why it's so important, because you just don't want to be left holding the bag. So we've gone through in the description of operations, all this wording that's popping up here. But it's just for your reference again here. And then that written subcontract is so important. And it's really important that that subcontract shows the limits that you actually require them to have, or in an ideal world, want them to have. Because say, for instance, you get a certificate of insurance and that subcontractor has a $10 million umbrella. And in construction, that's what we recommend you have. Now, if you got a one-man painting operation or something like that you're subbing out to, they may be like, I can't afford $10 million in an umbrella. You know, so a lot of our GCs will say, okay, we're only going to make them have a $1 million umbrella in our subcontract agreement. But say you get a sub that actually has a $10 million umbrella. You look at that cert, you're like, sweet, they've got more coverage than we require. You don't get that coverage. You only get the 1 million you wrote into your subcontractor agreement. So let's say they cause a $3 million loss. Their insurance carrier is only going to pay $1 extra million because that is all you require. So that subcontract agreement can really trip you up. So it's better to put higher limits in your subcontractor agreement and then kind of on the back end be like, yeah, Joe's painting, your $1 million is cool. It's fine. But your subcontractor agreement is going to prevail. So put the higher limits in your subcontractor agreement, and then maybe on the back end, for certain people, you make an exception. We have some really large GCs that do that, because the subcontractor agreement at the end of the day is what's going to prevail. All right. So we talked about the limits here a little bit. So general liability is usually a $1 million per occurrence. So that means each claim. And then a $2 million policy aggregate. I almost never see anybody have less than this. I mean, gosh, I can't even remember the last time. It's been probably 20 years. That's just the standard that most carriers provide. So that's what you want to make sure that you're accepting. If you see something less than that, which I seriously doubt you ever are, just don't accept it. Okay. So the coverage, we've already talked a little bit about the ongoing and the completed operations, all of these things you need to require. This is specific to general liability. Most of these things apply to all lines of business, but some don't. And we'll get into workers' comp, just a little bit weird. Professional liability is a little bit different too. All right, real life claim example. All right, so Preferred Insurance actually insured a roofing contractor a while ago that was, they hired a subcontractor. They were a roofer, but they hired somebody else. That subcontractor was performing hot torch work on a historical building. The building was over 100 years old. They did provide a certificate of insurance. Awesome. They actually had a subcontractor agreement too. However, the COI that sub provided did not include additional insured coverage. And it didn't include any waiver of subrogation or anything like that. In addition to that, their insurance policy, the subcontractor's insurance policy, specifically excluded porch work. So a lot of times this may apply to you, I'm not sure, but if you, one of the common things in construction insurance is residential work. Do you guys do any residential or hire anybody to do residential? Okay, so this example won't apply to you guys, but it is a very common exclusion for construction. Carriers don't want to hassle with residential. It's a nightmare. Residential in insurance includes apartments and condos. It doesn't just include single family homes. So if you've got somebody doing any kind of work like that, their policy might exclude residential work. So sometimes if there's some weird thing or some insurance thing that you guys are doing, a lot of times those people like NVR, for instance, NVR, Toll Brothers, those companies, they really do a lot of residential. They hire a lot of residential subs, drywall, painting contractors. Their insurance requirements actually make you state there is no exclusion for residential work. In this case, our insured didn't make sure that there was no exclusion for hot torch work. So subcontractors insurance carrier did not pay the claim. It fell back to our insured. It was a $3 million claim. Our insured's policy did pay that claim. So our insured wasn't left on the hook. Obviously, the general liability kicked in and then their umbrella had to kick in because it was $3 million loss and they only had 1 million and then their umbrella kicked in. However, their insurance carrier non-renewed them. Said, nope, we're not giving you coverage anymore. Get out, you're fired. They had to go to what we call the surplus lines market to get insurance, which is way more expensive, 3 times more expensive. So they ended up for the next 5 years having to pay 3 times more for their insurance than they had before. And it wasn't even their fault. It was a subcontractor that actually made the mistake. But because they were on the hook for it, because they didn't really scrutinize their certificate of insurance, they ended up having to pay the price for 5 years. All right, any questions on general liability? Okay. Automobile. $1 million is the limit that you guys should be getting for everybody. This is where you might see a $500,000 limit. Never accept it. It has to be 1 million and it needs to be in the stock. If you look at the certificate, automobile liability, and it needs to be in this combined single limit box, not spread out among bodily injury or property damage. If you see it spread out and it doesn't say combined single limit, that's a clue to you guys that they have a personal auto policy and not a business auto policy. Why does that matter? Because you cannot be an additional insured on a personal automobile policy. So they will not be able to name you as an additional insured and therefore you have no protection whatsoever. So you want to make sure that it's a business auto policy. And it should have all of the same things that the general liability has: additional insured, primary, waiver, and 30 days notice of cancellation. So an auto claim example. So we had a subcontractor who ran their truck through a store. Understand how people hit the gas when they're in front of a store. You've got to put the pylons there so people can't drive into Rite Aid. I just don't get it, but it happens all the time. And you know, they had to replace the store window. The subcontractor, they didn't get a certificate, so they couldn't hold them liable for the damage, and our insured had to pay $25,000 out of their policy in order to cover that damage. Small claim, but still, who wants to pay $25,000 for a mistake you did not make? All right, workers' comp. So this is a big one. This is going to be where you're going to see different limits, okay? Because in Virginia and Maryland and kind of this whole area, you have an option. You can get $100,000 for each accident, $500,000 policy limit, $100,000 for each employee. Workers' comp's a little bit weird because it's broken into different sections. Or you can have $500,000 across the board for all 3 of those things, but you really need to be making sure they've got $1 million across the board for all of these things. And it's so cheap. It costs like 1% of the total premium to go from 500,000 to $1 million. So especially for a small guy, it might cost them an extra $200 a year to double their limit. Okay. Another reason why you want to make sure they've got $1 million is depending on who their umbrella carrier is. Umbrella is going to start sometimes, we call it drop down coverage. Some carriers will not drop down to 500,000. So you're going to have a gap between 500,000 and 1 million. And that gap is not going to be covered if they don't have drop down coverage. So you want to make sure you're just getting $1 million across the board so you don't have to worry about that. Does that make sense? Okay. And then workers' comp is the one you cannot be an additional insured on a work comp policy. Okay, and that's fine. You just want to make sure that they've got waiver of subrogation and 30 days notice of cancellation. Those are the only two things that you need to care about on workers' comp. All right. So if you have a subcontractor that does not have work comp coverage, or, and this is a big one that we see, especially with smaller guys, there's a little box you'll notice here on the sample certificate, and it says workers' compensation, any proprietor, partner, executive officer, member excluded. And this box should always have a no in it, or an N, meaning that they are not excluding themselves as an owner. So this happens in a lot of like one-man operations. They need to have work comp coverage, so they get what we call a ghost policy, because it doesn't really cover anybody, because they've excluded themselves. They do that in order to not have to pay a bigger premium. If they exclude themselves and they go walking out onto a job site and they get hurt, there's no coverage. Our HVAC company, the one that does the HVAC in my house, the guy that comes out there, he's always hurt. And so one day he comes out to service it. He's got this gash all the way up and down his arm, right? He slid his arm into something and a piece of sheet metal sliced his arm. He had to have surgery, all this stuff. He's an officer. He's excluded from their work comp policy. So his health insurance has to pay for that claim. Next time he comes out, this was only a couple of weeks ago, he comes out and he's all banged up. And we're like, what happened to you this time? He was up on a ladder. The homeowner tied their dog to the ladder. It's kind of weird. We get the weirdest claims, right? And he goes to get off, walk down the ladder. The dog takes off. The ladder comes out from underneath him. He falls down. He's in the hospital. And he's like, I don't understand why my work comp is not paying for these claims. And I'm like, are you excluded? He's like, oh, maybe that's what's going on. He didn't even know. He's just he's an officer, but he's not an owner or anything like that. He's, but they have decided as a company to save money, and they're a big company, to exclude all of their officers. So these are guys that are actively, regularly going out to the job site and getting hurt. And the only recourse is for them to use their health insurance. Now, if you've got a subcontractor that's excluding themselves, that don't have very good health insurance, because they're usually self-employed, and they're going to be like, well, I don't want to pay for that. They might have a huge out of pocket or a huge deductible or something like that. So what they can do is you're a proxy employer of every subcontractor you hire. So what they'll do is they won't come directly to you. They'll go to the insurance commission and they'll file a workers' comp claim against you guys because they got hurt doing a job for you. So workers' comp is very important. If they do that and they're successful, and sometimes they are, that's going to affect your experience modification number. So when you guys are bidding for jobs, a lot of times they'll ask you for evidence or a letter or something of what your experience mod is, and they want to see it be below a 1.00, because that is what NCCI, the Insurance Commission for Workers' Comp, that's how they gauge how safe you are. So there's this huge algorithm that they use. They use your payroll and your claims, and they say, okay, based on this amount of payroll, you should only have this amount of losses. And if you go over that amount of expected losses, then you have what's called a debit mod. So you might have a 1.20 mod. That's why people that you guys do work for ask for what your experience mod is, because that's how they gauge if you've been safe and whether or not they want to hire you. I used to insure a very large HVAC contractor in Maryland. And they had a contract, an ongoing contract, a service contract that was worth $1 million a year in revenue to them. They had a fatality. Well, they had 2 fatalities. So that caused their experience mod to go, I think, a 1.10. They lost that $1 million contract, even though we were able to explain to them, look, this was a freak accident. I'll tell you what the accident was. It's pretty brutal. A guy, and this happens all the time, people make, knee-jerk split-hair decisions in the moment of a crisis that can literally cost them their lives. So this guy was in a big boom truck, and he parked it next to a shipping container. He forgot to engage the brake. The truck started to move. Instinctually, he jumped over to try and stop it, and he got crushed between the truck and the shipping container. and he died. So freak accidents happen all the time, but their accidents cause them to lose $1 million contract. And the thing about an experience mod is that claim is going to stay on the experience mod for 3 years, not just 1 year. So they couldn't get that contract back until that claim fell off and their mod dropped back down below 1. So workers' comp is extremely important, especially as it pertains to your subs. Also, if your subcontract, if you don't have a certificate of insurance from your subcontractor, so at the final audit, whoever handles the final audit for your company, they have to provide your subcontractors certificates to your insurance carrier. Are they with Erie? To Erie Insurance. If you don't have certificates for certain subs, or say you've got a certificate and it's missing work comp, or it's missing general liability, then they'll take the cost you paid to that subcontractor and add it to your audit, and you have to pay premium on. Why? Because they don't have coverage and therefore you're covering them. Okay. So it can cost you money at the end of the year as well. Any questions on work comp? Okay. All right. So we talked about how people will use your mod to qualify you for jobs and that it stays on there for 3 years. This is an objection that you might get if you hire small people. They'll say, well, you know, Virginia law says I don't have to have work comp coverage until I have 3 employees. And in Maryland, it's 1 or more. In DC, it's 1 or more. So depending on where you're doing the job, your response to that objection is that your insurance carrier requires that they evidence work comp coverage for all subcontractors, no exceptions. Just put it back on us. Just say, well, you know what, that's what my carrier requires, so you guys got to get a policy. That's when they'll get that ghost policy and exclude themselves. So that's why you've got to make sure that that box is marked no when they provide you with that policy. All right. Umbrella. $1 million, it's relatively inexpensive for most people, but today, in today's day and age, we are seeing claims that are absolutely going well above 2 million, the 1 million for the underlying plus the 1 million for the umbrella. So we really do recommend that you probably, if you're not doing it already, start requiring at least 5 million. I have at least 2 active claims right now that are almost $5 million. One is a sheet metal contractor. The guy slid his hand into a sheet metal press. The guy on the other end who's supposed to do the press, they didn't communicate. He pulled it down. He lost all 8 fingers. Okay. They tried to put them back on. It didn't take, so they had to re-amputate his fingers. This guy's going through it. That claim is at like 4.8 million right now, and it's still open. It's still ongoing. And it happened 3 years ago. Okay. Had another claim where a diabetic stuck his foot into his boot. There was a nail in it because he was diabetic and he had neuropathy. He couldn't feel the nail. Apparently he walked around for days, I guess, or kept putting that boot on and off. He got an infection in his foot and they had to amputate all of his toes. That was a workers' comp claim. That claim is up to almost 2 million now. So claims can get above that $1 million real quick, or even go into the next million. So, and auto claims is where we really see big ones. I had another situation, not to be gruesome, but these claim examples, you know, they are what they are. He's driving to work in a company vehicle, okay? And another guy on the other end had a heart attack, crossed the median, hit him head on. Our insured was not at fault, okay? But he got so hurt that his leg was almost amputated as a result of the accident. He's a young guy, he's only in his 20s, it's terrible. But the other, now, of course, this isn't a situation with a subcontractor, but this is how a claim can get big really fast. That other guy only had minimum limits, like 35,000 or 50,000 for bodily injury, 35,000 for property damage. So of course that exhausted everything on his insurance policy. The guy that hit him head on passed away and his estate had no money. So the workers' compensation for my insured is on the hook for that claim. That claim is over $2 million right now. Okay. So even if it's not your fault, so say you guys hired my subcontractor that had that loss. He's already exhausted his policy limits for the year because of that one claim. You have no way of knowing if they have, you have no way of knowing if whoever you're hiring has already had a massive claim. You're not asking for loss runs. Some GCs do. But you're not asking for loss runs. So you have no idea, right? So that's why you want to make sure you're asking for probably 5 million, 10 million, ideally, if you can get it. Okay. And we talked about how the umbrella needs to follow the underlying, and you want to have 30 days notice of cancellation. You don't have to get additional insured endorsements, waiver of subrogation, all of that stuff for the umbrella, because if it's following form, it's going to honor everything on the underlying. Okay, so you don't have to collect as much on the umbrella. All right. Do you guys hire anybody doing any kind of work with water? HVAC contractors, anything like that? Yeah, okay. These guys should always have pollution. Are you requiring that they have pollution?
We are.
Okay. This is the story of a very large mechanical contractor. They had about $250 million in revenue every year. They did a lot of work. They did do residential work. They did a lot of condos, you know, high-end condos, high-rise kind of things. They were repeatedly hiring subcontractors that did not have adequate insurance, or they weren't getting certificates of insurance from them. They did a lot of work with WCS. That was one of their main contracts. And they were having $15 million claims because of their subcontractors. They were hiring subcontractors that didn't have proper insurance and just did not do quality work. You know, the lowest possible bid was the one they were taking every single time. They had multiple $10+ million claims. Well, they lost their contract with WCS because WCS is like, yeah, we're not messing with this anymore. That happened so often that they couldn't get work with anybody else, and they filed for bankruptcy. So they lost their $250 million a year business because of the subcontractors, the quality of subcontractors that they were hiring. And one of the big things is that, you know, any kind of water claim can lead to a mold claim. Mold is excluded from every general liability policy. So if you're not requiring pollution of those guys that are doing any kind of water work, then you could be on the hook. Does Vantage have pollution coverage themselves? Okay. You don't necessarily have to have it as long as you're making sure that your subs do. Okay, so that should be one of the additional coverages that gets added to the sample COI. If you want to start pushing for that, and you can have sample COIs that are specific to industry types. So you would only give that sample COI to your HVAC contractors. When you guys read contracts that you're signing, a lot of times you'll see if doing XYZ work, you must have 2 million in pollution. If doing design work, you must have, you know, 2 million in professional liability. But if it doesn't apply to them, then they don't have to have it. So that should be an if-then clause in your subcontractor agreement, and it should be part of the sample COI. Okay.
So the sample COI that we have here, is that something you can send to us so we have a clean PDF form of it?
Mm-hmm.
And is that something that could be included in it, the pollution?
Absolutely.
So that we have the wording right of how to give it to them?
Mm-hmm. Yep. Daniel sent that to you guys.
And I think we've quoted you guys pollution a couple times. So if you're ever required for it, we can quote it again for you. But yeah, because I think you guys had a job that was asking for it, but ended up not getting.
And you can be an additional insured on somebody else's pollution policy as well. Okay. And Daniel have the sample COI include that wording for that. If you have anybody doing any kind of remediation work, asbestos, lead, stuff like that, it's pretty rare, but they also absolutely have to have pollution coverage. All right. That's all the things that you should be including. We'll put it on the COI. All right. So, now we're going to get into the actual certificate a little bit and those endorsements. There's just a couple things that I'm going to highlight for that. Let me stop this, and then I'm going to share the actual sample on the screen. So here's the certificate of insurance. We've kind of gone over most of this that's up here. One other thing I want to touch on the general liability. You guys see this box right here that says project that's checked under the general liability? You absolutely need to be requiring that, and it should be written in your subcontractor agreement. And the reason why is this $1 million limit on the general liability. If you don't have this, if it's checked for policy and not project, that means they can exhaust that limit with one claim. If it's per project, that general aggregate, then it's going to apply to every single project they do. So if they do 15 projects, then that means that they've got, 15 times 2, $30,000 or $30 million in coverage versus $2 million in coverage. Okay, so you want to make sure that that project box is checked and make sure it's in your subcontractor agreement as well. And okay, so these are all of the additional insured endorsements. These additions kind of matter a little bit because every time they do a new addition, they limit coverage and limit coverage and limit coverage, okay? Because carriers don't want to pay claims, right? So, well, some claims, especially for other people like subcontractors, right? So they'll keep limiting coverage. But one of the things that got added several years ago was that whole tying things back to the written agreement. So in your sample pack and on here, and we can send, you'll have this in an electronic format too. If coverage provided to the additional insured is required by a contractor agreement, the insurance afforded to such additional insured will not be broader than that which is required by the written contract or agreement, okay? This is the part that conveys coverage, okay? These endorsements, not this front page, these endorsements are what are going to be referenced in a claim. The carrier is going to say, well, send me all this stuff. Well, they're not additional insured, so claim denied. Or they're additional insured, but your contract didn't ask for this, so claim denied. So everything has to be required by written contract. This one here, this first one, you'll see it's just additional insured, just a scheduled person. This 2010, and this is the number up here at the top. This is for the ongoing operations. This is while they're actually performing the work. The second endorsement, you see it says completed operations. That's when the job's over, because a lot of claims happen 2 or 3 years down the road. That's another thing. You guys have to keep collecting certificates of insurance from your subcontractor for, whatever the statute of repose is in the state that you did the work. So if it's 10 years in DC, they need to give you certs for the next 10 years. Because if they do the job and then they're like, you know what, I don't need this insurance anymore, and they don't have coverage, and then a claim happens 2 years later, it is not going to be covered. Because they have to have coverage on the date that the claim gets filed. It'll go back to the date of loss, but if they don't have coverage on that date, then even though they had coverage while they did the job, if they don't have coverage for completed operations, you're not covered either, okay? And these, again, same wording, just has to be required by written contract.
Since that basically means insurance on each of the jobs we do for that period of time.
Yeah, and you are, because you have, as long as you continue to have coverage, then you're covered. So where we really see it happen is when somebody goes out of business. Okay, if they go out of business or they change carriers and then they don't reissue a CUI and all these additional insured endorsements from their new carrier, then you don't have coverage, okay?
So the fact that we pulled a project-specific COI for X project, it doesn't need to be renewed the next year and the next year and the next year, we're still covered?
You're still covered, but whoever hired you is probably going to want to continue to have a COI from you. So if they keep coming back to you and saying, yeah, we still need a COI for this job for the next 3 years or 5 years or whatever. And that's usually baked into the contract. So the contracts you guys are signing and your own contract that you get other people to sign should say that coverage should be maintained for X number of years. And what we do, so we send out all your cert holder list to whoever manages your certs that you guys have to issue. And you will say to us, remove this one, remove this one, remove this one. Well, don't tell us to remove it if you need to keep that COI for 5 years. Keep that on there and we'll just keep reissuing the certificate for you. Does that answer your question? Okay.
I can't remember on the sample we give out, is it 5 years that we have on here? We say it somewhere, I forget where. On the
Mhm,
sample.
control that.
Oh, yeah, I thought it was like years. Anyway, it's on the sample sub-agreement, that requirement.
This is an example of waiver of subrogation. So that's so that they can't come back and subrogate against you guys. And again, the only reason I'm going through these endorsements is just to highlight that every single one of these talks back to your subcontractor agreement. It has to be agreed in writing, required by this waiver of subrogation just says it 3 times, just in case you missed it. It has to be agreed to in writing. You are required by contract to do this, or the contractor agreement says that you have to do this, and that contractor agreement has to be executed prior to the loss. So if you didn't get a signed, which I'm sure you absolutely are not doing, but if you didn't get a signed subcontractor agreement and then they have a loss and you try to go back after the fact and get them to sign it, sorry, no. All right, again, this is a waiver of subrogation for workers' compensation. This agreement applies only to the extent that that you perform the work under a written contract that requires you to obtain this agreement from us. Okay, so in some form or variation, every single one of these endorsements is going to refer to a contract. Your work done under a contract. If there's no contract or your contract doesn't have these requirements, then you are not as covered as you might think that you are.
So if we get a COI, but have not issued a purchase order, then the COI isn't valid.
Is the purchase order part of your subcontractor agreement?
We have a master subcontract agreement that's covering everything that they do, but then we give visual purchase orders.
That's just an addendum to the subcontract. So that's okay, as long as they have signed that master sub agreement prior to starting work with you guys, which of course they're gonna do. Because that's how you say how much you're gonna pay them, stuff like that.
For project basis. So you guys will reference balance. Yeah, I think with how that the MSA that is general, it's a match. Right?
Mhm.
It's not what ties it up to the specific job is the CO, which can't have that.
Ideally,
And there were PA that mentioned the required insurance
Mhm.
for that particular job.
And then ideally, you want to absolutely make sure that all of that stuff is buttoned up prior to. Which you probably are, right? They're not going to start the job until you've done the purchase.
I mean, typically, we're not gonna get a COI until they have a purchase order.
Right.
It was just curious.
Okay, yeah, no, you want to have all that administrative stuff buttoned up. But I will say this, if they have signed a master sub agreement and they're just going to a different job, if they've got blanket coverage, most carriers issue blanket coverage. So on these endorsements, you'll see these boxes here. That basically reference, the name of the organization, which would be Vantage, and then location of covered operations. If they have blanket coverage, and that is ideally what you want to get, because that's going to cover them for any job they do for you guys, okay? So if you have, repeat subs that you use over and over again, typically what will be written into this box is blanket as required by written contract. So that means any job they do for you is going to be covered. So that master sub agreement is going to come into play, and the individual purchase orders won't matter at that point. So as long as you're getting all of these things on a blanket basis, you're fine. Sometimes if it's a smaller subcontractor or if they're in surplus lines, because surplus lines like that one roofing claim I mentioned to you guys, they're not as friendly about doing blanket everything. So sometimes, and I don't know if you've ever seen this before, you may not, because it's not very often. You may see where the specific job is listed in this box, not on the COI itself. You always want the specific job in this description of operations box down here. But on the individual endorsements, if you see a specific job mentioned, then you are only covered for that one job. So that's why just ask them to ideally have blanket coverage, but sometimes people can't get it. And what happens on the other end for these subs, just so you understand what they're up against, if they have to get them for each and every job, they have to pay for them for each and every job. So when you have blanket coverage, like Erie, for instance, charges you guys $350 a year. for blanket additional insured. That's it. You'll never get charged anything else. So you can issue 1,000 certificates and you will only get charged that $350 one time because you have blanket coverage. Other people who can't get blanket coverage for whatever reason, they might be paying $500 to $1,000 for each individual cert that they have to issue. And so it gets really expensive for them. So that's why you might get pushback sometimes, but sorry, cost you doing business. You got to do it. Yeah.
$2,000.
Yes, that's exactly what it is. And just ask them, is your carrier willing to do blanket? And that blanket might cost them $500, but they're going to be covered for 12 months, for every job that they do. So it's worth it to them to do that, One of the things that we can do for you guys too, I do it for a lot of the accounts that I service. I'm sure Danny's done it for you guys. I think Danny's even sent some to me from you guys. If you get a certificate and you're not sure if it's an okay cert, send it to us. We can look at it real quick and say they are missing blah, 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 blah. We'll basically kind of be a cert clearinghouse for you. We can't do it for all your certs, but we can do it for the ones that you're just not too sure on. I'm not sure if this is going to be okay. Or if they give you some weird pushback like that, just be like, hey, is it okay if we waive it for this guy? Or what can we do to help them? And we can put in an email to you, something that they can forward to their agent that's going to basically be the vernacular of insurance that their agent's going to understand. So we've been able to help subcontractors do it. We'll also write the insurance for your subcontractor. So if they can't get coverage or they don't have coverage or something like that, Erie is super cheap for small artisan contractors, like $500, $750 a pop for a policy. And we can get them all those extra coverages that they need. So a lot of our GCs, they'll send their subs to us, just to insure them. Because sometimes our GCs, I don't know if you guys are ever doing this, but some of our GCs will actually agree to just pay for the insurance for their sub because they'd rather do that. They'd rather pay an extra $1,000 to that sub, making sure they've got adequate coverage rather than take a chance. So for them, it's worth the expense. So they'll say, hey, preferred, we have a small business unit, can you guys quote this for us? Because we're going to pay for the insurance for them. And then they just know they're covered. So we can always do that for you. Just send it to Danny and he can get it to the right person.
Yeah, and I think you guys had looked, and maybe this was years ago, at like a MyCOI or something. And I think Pat had sent one that we referred, I forget what the company was, but if you guys are ever looking into that again.
Yeah, I helped get a GC set up with a MyCOI type thing. And what he did is he asked me, because that MyCOI, like we'll say is MyCOI, but it wasn't. They'll say, okay, for this price per year, we will check 5 endorsements. Every endorsement after that is going to be X amount of dollars per certificate. So he's trying to keep his costs down, right? So he comes to me and he's like, which one of these endorsements can I go without? And still have, as much coverage as I can possibly have. So I'm like, you need all of them. He's like, yeah, but, and I'm like, all right, fine. You can get rid of the primary non-contributory wording. That's the one that we can kind of be like, all right, fine. If you got to forego one, forego that one. And that was the only one I would let him not do. Let him, like I'm in charge of them. But, it's just like, hey, just don't do that. And the thing is, like, I'm trying to protect them as much as I'm trying to protect the carrier, because I know what it's like when somebody can't get insurance coverage. South Carolina is a perfect example. South Carolina is a terrible state to work in. Don't ever go to South Carolina. South Carolina has what's called a continuous trigger of liability. So if you have a claim today, no, let's back up. You have a claim for a job that you did in 2015, okay? Their statute of repose is 1,000,000 years. I don't know what it is, but it's long. And a claim comes in, and this is a residential contractor, so it's a little bit harder, but a claim comes in from 2015. I've got to report that claim on their policy that they had in 2015, 2016, 17, 18, 19, 20, 21, 22. Every policy that they've had since 2015 is on the hook for that claim. And that's because of that continuous trigger of liability. So no carrier wants to write in South Carolina because of that, because they might not have been the carrier at the time that they had the loss in 2015, but they still have to defend that claim. The defense on every one of those claims roughly is about $25,000. The claims usually get closed out because they weren't at fault. They're a painting contractor. They didn't do anything, but they do work for NVR and KHOV and all of them. And so, and these nefarious lawyers will go into these new subdivisions or new townhome divisions, and they'll knock on doors and be like, are you happy with your new home? Is there anything you wish that they had done better? Well, yeah, you know, actually, there's a little crack here. I don't really like the way they did the paint above my garage. Boom, they file a claim and they bring in every single person that worked on that job, every single person, even if they weren't the one that did the paint above the garage, or, you know, the roofing trusses shifted, so there's a crack in the drywall on the ceiling. That's the responsibility of the roofing contractor, not the drywall contractor or the painting contractor or the HVAC contractor or the electrician or the plumber. Every single one of the people that worked on that job gets pulled in that claim, and the carriers have to defend it. They have a duty to defend you, whether you're at fault or not, whether it's a legitimate claim or not, they have to defend you. And that defense costs a little bit of money. They may not pay anything out on the claim, but it costs money. So I have a contractor, they're pretty big, 115 million or so in revenue. They're in 13 states. One of them is South Carolina. This year, I almost couldn't get them coverage in South Carolina, even in the surplus lines market, because nobody wants to do South Carolina anymore. But they do about 15 million a year in revenue in South Carolina. So it's an important market for them, and they can't not work there, okay? Plus they have ongoing contracts that they need to fulfill. So their general liability for all other 12 states was $99,000 a year. The general liability that I was finally able to obtain for them in South Carolina was $152,000. It was more than every other state they worked in combined, and that coverage is subpar to the coverage they have. So I had a whole nightmare trying to get KHOV and NBR and all of them to accept their certificates of insurance because there were so many limitations on coverage. But you know, it worked out in the end. But that's what can happen when you start getting a bunch of claims in a certain market. It just makes it a little bit difficult. All of these endorsements that you'll see on certs, unfortunately, the insurance market hasn't figured out how to standardize everything. So every carrier has their own form. And so when you get these endorsements, they're not always going to look the same. And that makes it hard on you guys because you don't work in insurance, right? So you're like, I don't know if they really actually have this coverage. So a lot of coverage comes in the form up here. This is called an enhancement endorsement. A lot of these enhancement endorsements will throw in the additional insured, the waiver of subrogation, and it's baked into 14, or this one's 5 pages, but it's baked into 5 pages, and you have to look through all of it and figure out what you're looking for. That's where sometimes it becomes difficult for you guys. And if you shoot it to us, we know exactly where we're going. You know, we know what we're looking for. We can help you make sure it's okay. So that's the challenge that you guys are up against is figuring out, do they actually have the coverage that we want them to have? So you can see sprinkled throughout this 5 pages, and this is for their commercial auto. Sprinkled throughout these 5 pages is the waiver of subrogation, the additional insured, and of course it all says when required by contract, right? The primary non-contributory, and then I think all the way at the end, waiver of subrogation is 15 bullet points down, as required by written contract. I know I keep hammering that home, but you wouldn't believe the amount of claims I see get denied because that contract wasn't sufficient. And this is how the carrier denies it. They're like, hey, it was written right in the policy. So, you should have read it. But people don't read insurance. I'm an insurance agent. I don't read my insurance policies cover to cover, right? Who's going to read it? So these are just samples of all of what some of these endorsements might look like that you get, but you're going to get ones that look completely different to this. There's probably hundreds of these variations. Any more questions? All right, that's our show. All right, well, Danny's going to send you some stuff. We'll get some things beefed out for you. We'll make sure that subcontract, if you want to send us your subcontract agreement again, send it to Danny. Let us take a look at it for you, please. I'm happy to let you send it to me. I'm happy to look at it, make sure it's good. And I'll send it back to you with any comments that I might have for things that you might want to change going forward. Okay. All right. Thank you guys. I appreciate it. I know it's long. I know it's boring, but thank you for coming. We appreciate it.
Thank you.
Yeah, sure. Uh-huh.
And